really thought through what are the implications on humanity of the let's call it the rise of the machines.
I must thank you so much, Dr. Andrew Nevin. Thank you. It's really good to see you on the program. Economics research professor joined us from Dallas, United States of America.
Thank you, Tolo. Have a great day.
Thank you. You too. Well, it's time to review trading activities at the Nigerian Exchange Limited. And my colleague Effiong Ekop joins me via phone to talk more about markets. Effiong, are you there? Okay, we'll still try to connect with Effiong. The market is down 0.38% for today. But let's take you to outside our shores. Asian stocks lead today as the chip sector stocks tracked overnight declines by Wall Street peers, while Facebook owner Meta Platforms and Microsoft warned of accelerating cost of artificial intelligence. Japan's Nikkei share average ended the day down 0.5%. South Korea Kospi dropping 1.5%. Hong Kong Hang Seng added 0.3%. Mainland Chinese blue chips rose 0.2%, reversing an earlier decline after surveys of manufacturing and services in China showed some pickup in activities. S&P 500 is 0.5%. Nasdaq futures dipped 0.8%. The Philadelphia SE Semiconductor Index slumped 3.35% overnight, with advanced micro devices tumbling more than 10% following the TOR forecast. Now, Eurostock 50 futures and DAX futures eased about 0.4%. FTSE futures fell 0.3%. The Bank of Japan has maintained ultra-low interest rates, saying risks surrounding the U.S. economy are subsidizing and also signaling a rise in interest rates again. Central Bank has also projected inflation to move around its 2% target in coming years, stressing to keep hiking borrowing costs if the economy sustains a moderate recovery. Addressing the press concerning the timing of the next rate hike, Governor Kozo Huda said he have no preset idea but promised to scrutinize data available at each public meeting and update the public view on economy and outlook in deciding policy. Let's head to the United Kingdom, and where there's been a backlash to U.S. Chancellor Rachel Reeves' £40 billion in tax raise budget, which has begun. Labour's first budget in more than 14 years sees £22 billion extra cash for the NHS and a hike in the minimum wage. Some Britons, like former Chancellor Jeremy Hunt, have attacked his successor's financial plans. Some of the main issues are that the amount of national insurance paid by employers will increase to 15% from April next year, and the threshold at which they started paying will reduce from £9,100 per year to £5,000 per year.
It's a very bad day, not just for the economy, but actually for trust in British politics. What I do accept is that we would have had some very difficult decisions as to how to get funding into public services without having austerity cuts, and that was something I always wanted to avoid as Chancellor. And the NHS definitely needs more money. I welcome that. I gave £6 billion to the NHS in the spring budget. But you can do it in lots of different ways. The easier route, of course, is just to pick the pockets of businesses, but it's very damaging for the economy and for growth.
It's great for me because obviously someone on minimum wage means I'm earning more, can afford to do more. Obviously being my age, I'm 23, maybe actually looking to rent in my own house and things like that. It's going to increase people's motivation to work. Even people who aren't working, maybe they're going to want to work more.
I am disappointed that they do seem to be targeting the working man. It's like putting up the minimum cost of the bus fares from £2 to £3. People that go to work have got to still get to work, and it's taking money out of their pocket to get there.
I'd say it's a mixed picture. The very lowest paid in society are better off, no doubt about it at all. £1,400 for someone on a minimum wage a year, that's a big deal. Those on lower incomes, mixed picture, middle incomes, mixed picture, probably more take than give. Those on higher incomes, I'm afraid you're going to have to dig deep into your pocket for this one.